Hey guys, welcome back to our channel. We are passionate about helping people with business and accounting. In today's video, I want to talk about the new guidance that the IRS has issued regarding the employee retention tax credit. So if you're interested, keep on watching. On January 26th, the IRS issued a news release that covered some of the changes in the employee retention tax credit. So let's head over to the computer and take a look. So here's the article. It's called New Law Extends COVID Tax Credit for Employers Who Keep Workers on Payroll. So really quickly, the employee retention tax credit is for employers that have W-2 employees on payroll and they file Form 941. So the IRS urges employers to take advantage of the newly extended retention credit designed to make it easier for businesses that, despite the challenges of COVID, choose to keep their employees on payroll. The Taxpayer Certainty and Disaster Tax Relief Act of 2020, enacted on December 27, 2020. So do you guys remember that? Do you guys remember all the videos that came out on YouTube after December 27th talking about all of the changes that took place a few days before the end of the year? So this is what that is referring to. The Taxpayer Certainty and Disaster Tax Relief Act of 2020, enacted on December 27, 2020, made a number of changes to the employee retention tax credit previously made available under the Coronavirus Aid, Relief, and Economic Security Act, so the CARES Act, including modifications and extending the Employee Retention Tax Credit, ERC, for 6 months through June 30th, 2021. Several of the changes apply only to 2021, while others apply to both 2020 and 2021. As a result of the new legislation, eligible employers can now claim a refundable tax credit against the employer's share of Social Security tax equal to 70% of qualified wages they pay to employees after December 31st, 2020 through June 30th, 2021. Qualified wages are limited to $10,000 per employee per calendar quarter in 2021. Thus, the maximum ERC amount available is $7,000 per employee per calendar quarter for a total of $14,000 in 2021. Employers can access the ERC for the first and second quarter of 2021 prior to filing their employment tax returns by reducing employment tax deposits. Small employers, employers with an average of 500 or fewer full-time employees in 2019, may request advance payments of the credit subject to certain limits on Form 7200. After reducing deposits in 2021, advances are not available for employers larger than this. So I'm assuming the larger than this is larger than 500 or fewer employees. Effective January 1st, 2021, employers are eligible if they operate a trade or business during January 1st, 2021 through June 30th, 2021 and experience either. So there's stipulations on if you can take this credit. So a full or partial suspension of the operations of their trade or business during this period because of government orders limiting commerce, travel, or group meetings due to COVID-19. So basically government shutdowns due to COVID, or a decline in gross receipts in calendar quarter, so we're looking at a quarter, in 2021, where the gross receipts of that calendar quarter is less than 80% of the gross receipts in the same calendar quarter in 2019. To be eligible based on a decline in gross receipts in 2020, the gross receipts were required to be less than 50%. Employers that did not exist in 2019 can use the corresponding quarter in 2020 to measure the decline in their gross receipts. In addition, for the first and second calendar quarter in 2021, employers may elect in a manner provided in future IRS guidance. So does that mean there's going to be more guidance from the IRS regarding this matter? To measure the decline in gross receipts using the immediately preceding calendar quarter. The fourth quarter in 2020 and the first calendar quarter in 2021, respectively, compared to the same calendar quarter in 2019. In addition, effective January 1st, 2021, the definition of qualified wages was changed to provide for an employer that averaged more than 500 full-time employees in 2019. Qualified wages are generally those wages paid to employees that are not providing service because operations were fully or partially suspended due to the decline in gross receipts. For an employer that averaged 500 or fewer full-time employees in 2019, qualified wages are generally those wages paid to all employees during a period that operations were fully or partially suspended, or during the quarter that the employer had a decline in gross receipts, regardless of whether the employee are providing services. So now here they're going to talk about retroactiveness. Retroactive to March 27, 2020, enactment of the CARES Act, the law now allows employers who received Paycheck Protection Program loans to claim the ERC for qualified wages that are not treated as payroll costs in obtaining forgiveness of the PPP loan. So you can't double dip. So what they're saying is you can go back to March 27th and claim this credit, but if you receive PPP loans, you cannot use the same payroll cost in PPP forgiveness and for the ERC. Now, I know the IRS puts a lot of information out there, so if you're ever wondering if you have the most up-to-date article, if you scroll down to the bottom of the article that you're reading, you can see when it was last updated. So this page was last updated January 27th, 2021. And so we can see that this is the most up-to-date information regarding the ERC. Now, it's my understanding that as far as 2020 Employee Retention Tax Credit, the qualifications for that credit has not changed if you're filing for 2020. This article mainly focused on 2021. Now, if you're someone that has a payroll provider like a QuickBooks that does like full service payroll for you, or any other provider, you need to take a look at your 941 that they filed and see if they took the Employee Retention Tax Credit. So if we go to Form 941, and if you look on line 13D, refundable portion of employee retention credit, that's where the credit amount needs to go. So if your payroll provider, if you don't see an amount there, then that means that they did not take the 941 and you would want to amend your 941. If you have not filed for PPP forgiveness, then you can take this credit by either filling out the Form 7200 or filing it on your 941. So if you've already filed a 941, you need to amend the 941. So some payroll providers will charge you to amend the return. So they're gonna rely on you to provide the correct calculation. I highly recommend that you find a tax professional in your area that can assist you with this employee retention tax credit. I hope you found this video helpful. If you did, please give it a like. Subscribe to the channel if you haven't, share it with a friend, and I'll see you in the next one. Bye.